Starting with market developments overnight, the New Zealand dollar fell against the US dollar and is currently sitting at 79 cents against the US dollar. This continues the decline in the NZ dollar that we've seen over the past 3 days. Over recent weeks, strong demand for equities and commodities have buoyed market sentiment, and it has also helped underpin the recent strength in the NZ dollar. Since the start of the week, we've seen a reversal in this sentiment. Crude oil prices eased overnight, weighed down by weaker US economic data and indications of rising US levels of crude inventories. Both these developments suggest that demand for crude oil might be weaker than previously expected. However, the decline in crude oil prices has not spared New Zealand consumers from an increase in petrol prices at the pump. Petrol prices have increased 3 cents a litre this week. A spokesperson from BP has noted that a rise in prices for refined petrol has been behind the increase. Global refining capacity has been very tight, and there are concerns that lower supply of oil from the Middle East, which tends to be lighter and sweeter, may put further pressure on global refining capacity. The rise we've seen in oil prices pose a significant threat to the recovery in the New Zealand economy this year. The impact of the Christchurch earthquake was apparent in the short-term visitor arrival figures that were released for March yesterday. We saw another sharp decline in the number of international visitor arrivals, which fell 7% in March, following from a 5% decline in February. This brings the number of international visitor arrivals to the lowest level since 2005. It's extremely clear that visitors have cancelled their trips to New Zealand as a result of the Christchurch earthquake, and it may take a number of years before we see visitor arrivals return to normal levels in Christchurch. In addition, there are concerns that there will be severe flow-on effects for the rest of the tourism sector outside Christchurch.